What's going on, guys? In this video, I want to talk price action for scalpers. So I know a lot of you guys trade the NQ. A lot of you guys are using prop firms to kind of leverage the cash. You guys are taking evaluations. You're wanting to get paid. So a lot of times, either you're looking for the big home run trade or you're taking very small scalps, trying to just kind of, dink and dunk your way into passing evaluations or getting paid out. Now, what you're kind of failing to realize on the bigger grand scheme of things is, regardless if you're scalping the 1 minute time frame, you're scalping the 5 minute time frame, you need to start looking at some of the higher time frames. Now, I'm not saying that you need to get into looking at the 4 hour and the 1 hour, or excuse me, and the daily, but the 15 minute, the 30 minute, and the 1 hour for scalping is absolute gold. Okay. Now, I like to kind of start off with the 15 minute because typically for me, I'm scalping, sub 5 minute time frames. And a lot of times as traders, we are finding setups on the sub 5 minute frames between 1, 2, 3, 4, and 5 minutes where it's not the best time to be taking the trade. Okay. And what I mean by that is, if you look at this chart, this is a 15 minute chart. You're going to see in this period here, and today is a perfect prime example. Today is the 9th of December, but between the hour of 11:30 Eastern, 11:45, 12 o'clock into lunch, there was no good trades to be taken. And I can almost guarantee you that if you were actively trading today, you were aggressively looking at the markets, trying to go long and deciphering if we're going short and, trying to bounce everything. But realistically, you need to take a look at the bigger body of work, right? So to me, what kind of makes sense, and I'm going to actually take off everything from this chart. Okay, there we go. When I look at the actual bigger body of work here, we're coming off an extended move to the downside where each candle was kind of taking out previous candle lows until right here. We got a lack of follow through, and then we started to get this range. And this range was for the better half of over an hour. Now, if you were actively trying to scalp long, scalp short, scalp long, scalp short, scalp long, scalp short, scalp long, scalp short, you probably got torn up a little bit. Okay. So what I want to see is in this range, what I'm looking at is the bottom half of this range, right? So between the body and the wick, what I'm going to do is I'm going to mark out a little bit of a what? A demand zone. Now, this demand zone here on a 15-minute time frame is from 21,472 all the way down to 435. So this is a 40-point range, okay? Now, if we were to get below this 40-point range, then maybe there's a short opportunity once we break through the bottom and we back test the range, hold, then confirm the new lows. But what I can tell myself here is that as long as we are trading inside of this range between the bottom wick here and this big candle where we had no follow through, you can draw another box here. Now look at this. If you were to drag this across, you've got a definitive and very clear range where you're not looking to take trades inside this range until A, we break the range, back test, and put in a new high, or we break the range, stall, fail, and then lose the range, and we can trade that back down to the bottom. Okay, so let's see what that looks like on a 5-minute time frame. So if we go down into the 5-minute time frame, you're going to see between this bounce, if you didn't catch this bounce, you don't really want to be trading back and forth. Okay, back and forth, back and forth. What you can do is maybe once we break the range, tell yourself you're going to take a scalp and use that previous 5-minute candle low as a stop. So as we break through the range here of 529, we trade all the way to high prices of 548. So about a 20-point breakout. Now, mind you, I'm going to get you guys up to speed a little bit, playing breakouts of ranges or technical levels or breakdowns are very, very risky, because a lot of times you break out of the range and then you pull back and then go, or you fail. So if you're going to play a breakout of a range, make sure you're thinking scalp, right? How do I kind of mark out what I would like to take for take profit? Well, whatever time frame I'm trading on, I'll look at the ATR, which is average true range. And if this is telling me the ATR is sitting at around 17 points, well, if I play this breakout and I can pick up 15, 16, 17 points, I'm going to take profits 10 out of 10 times. Okay? 10 out of 10 times. And then I'll wait for a break and retest and confirmation. If there is no break, retest, and confirmation, then I'll be looking for a loss of that previous range to play back down to the following previous range. It's common sense. We're not going to allow this business to completely rip our hearts out and drive us mad. We need to make things more simple. That's what I'm trying to do inside of Evolution Traders each and every single day. I jump on a live call after about the first hour to hour and 20 minutes of the market. Once we've printed some price action, I go on a live call with everyone there for about 2 or 3 hours, and we try to find the best potential setups. Now, once we break through the bottom of this range, well, we also get my strategy's 20 play setup. And this 20 play is a lot more confident to take, because we've understood that we've broken out of a previous range, failed to backtest, and confirmed to go higher. We could pretty much be telling ourselves we can put on a 25-point risk here, even with one micro or one mini contract. It's a $500 risk per trade, which is not a lot, guys, on the NASDAQ. And we could potentially try to target a $500 win to the downside. So an even sweep of a 1-to-1, risking 25 points, it sounds like a lot. Ooh, boo-hoo, scary. It's the NASDAQ, guys. It's the wild, wild west. Shape up. $500 risk for a potential $500 gain is a fantastic move. Essentially, you didn't even need to catch the whole downwards turn. You didn't need to trade through the chop. You could have just waited for this break and failure and take a good old-fashioned 20 play to the downside. Right back into your price target of your previous range. And we would have never got this range if we weren't following a higher time frame confluence. So we need those higher time frames as scalpers and as short-term day traders to kind of put us in our place sometimes, to kind of tell us, hey, chill the hell out. There's no real reason that we need to be chasing long, short, long, short, long, short. Let's wait for a breakout and take a scalp, and let's wait for a continuation long, or let's wait for the failure back down. Hope you guys enjoyed this video. If you want to trade with me each and every single day live, make sure to join the Discord. That link is down in the description box below. Also, on your way out here, guys, my channel should be at 12,000 subscribers. You guys are dropping the ball hard. Make sure you guys are subscribed and hit the like button. I'll see you guys on the next.